This is Chief Investment Officer Gary Reynolds that's with us today. And Gary, I'm going to ask a question from a client first. What happens if the tech bubble bursts?
Well, we've been concerned about the overpricing of large US tech companies for some time. It caused us to underperform the S&P 500 index in 2023 and 2024. But last year, we outperformed. And our growth fund, which is generally all equity, returned just over 19%. And that was better than the Mag 7, which I think returned about 16, and I think the S&P 500 about 11.
With a lot less volatility.
Well, I was going to come on to that, Leo, and that was there was a segue in. We did it. The Mag 7 had volatility, annualized volatility in 2025 of 30%. Growth, our growth fund, which is generally all real assets, it hasn't got the more cautious approach of cautious fund and balance.
And caters for our clients with the highest risk appetite.
Absolutely. So this is for clients that are investing aggressively for the long term and can take the ups and downs. But let me be clear on one thing. Investors in growth fund are long-term investors. They're not speculators. I think if you're buying the Mag 7 and the Mag 7 only, you're a speculator. And our vol was under 12% versus Mag 7 at 30. That's huge. So we outperformed and we had considerable less volatility. Now, our exposure to Mag 7 is incidental within our equity content in the multi-asset funds. So the Mag 7 form well over 30% of the S&P 500 index, which is an index of the biggest 500 companies in the US. And as the US forms 70% of the world index, that's how dominant US equities are in asset markets, the Mag 7 form about 25% of the MSCI World Index. To put our position in context, which is incidental because we've got some positions on the S&P 500 and some positions on other indices, our exposure to Mag 7 is around 3.94%. So we're a lot less. And if investors look back and see what happened in April 2025, when we had Liberation Day and Trump was bringing in his tariffs, we went down, sure, because markets around the world went down, but we went down a lot less than big US tech. So we're positioned to be in the stocks which we think offer much better prospects long term around the world, and we're not keen on the tech. So in a way, if the tech bubble bursts, we'll be cheering. And when it's had a wobble recently, we've done relatively extraordinarily well.
So let me be bold and say what happens when it bursts. From a strategic perspective, are you and the investment team ready for that? Will it affect us as a value investor? Will it affect clients?
I guess the big worry for people is if that tech bubble bursts. Okay, Leo, let's use your phrase. Let's use when, because I would be in that camp. It's not a case of if, it's a case of when. And I'll give you a couple of things.
But whether it does or not, you guys need to be ready if.
Absolutely.
So this is my approach of when.
Yeah. So that's fair enough. So if it happened at the moment, the concern for everybody would be that it cause a massive sell-off in world equities. I would counter that by saying that the biggest collapses you get in real asset prices is when people are highly leveraged. In other words, when they've been borrowing lots of money to invest, which was happening before the global financial crisis. Your institutions were getting over leveraged. Now, leveraged, I've been banging this drum for some time. Leverage has been coming down in this country, in the US. Households have been paying back debt, serve corporations. So there's not a lot of leverage in the system. The other thing I would say with the Mag 7 is that the difference between the tech bubble you've got today and the one you had in 2000, which was the dot-com bubble, is that bubble was built predominantly on borrowing Whereas in fairness to the Mag 7, they're cash generative. Their spending is coming from their own profit generation, but they are massively priced as a multiple of those profits compared to the rest of the market. So I know you're going to say, Leo, I've not answered your question.
No, I wasn't. No.
I think that what you'll see is that if this tech bubble bursts, it is going to affect the Mag 7 a lot more than it affects the rest of the world, which is reasonably priced. And that's the difference. There's one big thing with this bubble is you've got the haves and the have-nots are massively different. And generally, tech stocks on the US market are valued at huge multiples compared to anywhere else in the world.
So the Courtier investment team wake up, wherever they are, ready to head into work, switch on the news, it's burst. What does that morning look like when you all get in?
These types of things happen very rarely, but routine. So this is what my day would look like. I'd be grabbing my iPad because I wake up around about 5:15. I'll grab the iPad, I'll have a read, I'll read some research notes, but the first thing I do is look at Bloomberg, and the first thing I'd look at is the futures market overnight, because what's happening to the futures market will tell me what's going to happen when the UK market opens on the day. So if there's anything untoward happened overnight, it's happened in the futures market.
I think fair to say that we'd be in touch as well, because we need to be sat right here getting something out.
Well, it's exactly what we do, isn't it? You know, when you've had Brexit or any of these other collapses, generally I'm in the office by about 6 o'clock, and hopefully you've got some communication out. By the time our investors are picking up their emails or looking at their phones, there's communication from us saying, well, look, this has happened. This is what we're doing about it. So if you wake up and there's been a massive collapse in prices, and there have been some big losses, you know, so far this year, a lot of the Mag 7 are losing double digits. So I said last year, I was hoping that, you know, when the bubble bursts, as it will, it'll be a slow puncher as opposed to a pop. And I think that's more likely, because there's no reason why you should mark these businesses down considerably. Just for the record, that these businesses are good businesses, but they're just overvalued.
Would a burst open up the floodgates to a load of new value opportunities?
Well, there's loads of new value opportunities out there.
Would it put the spotlight on them?
It would put the spotlight on them. And I think what you can see is when the Mag 7 underperform, value comes into its own. So when the Mag 7 have been weak, we've been very strong because we're very value orientated, unapologetically, because it's a good way to invest for private clients that have got long-term objectives.
And I think spotting these value opportunities takes a lot more work technically than, say, the Mag 7. You know, what I'm thinking at the moment is you'll hear it all day long in the pub, for example. Oh, Tesla this, Nvidia that. Is FOMO one of the drivers of a potential bubble burst? Because people will hear about it more. Oh, I've got to put into that stock. I've got to put into that stock. And then when it does burst, what are these people going to talk about at the bar?
But fear of missing out is one of the key drivers of any bubble, particularly in its later stages. Even those that have stayed out eventually think, oh, I can't stay out this much longer. And from an asset manager's point of view, it's very, very difficult. So Tony Dyer, Phillips and Drew, who was calling the collapse in the dot-com market way into the 90s, I think was out of a job just before the bubble burst. And the problem is, you know, if you're negative, and you're underperforming, as invariably you do in these periods, then money goes out the door. I think where we're fortunate is we've got a very long-term track record. You know, the funds will be 20 years old. The multi-asset funds will be 20 years old next year. And I think, therefore, clients who have been with courtiers, some of them, for, 40 years and have been in the fund since outset, build up a level of trust because the funds do what we say they will do.
And in terms of numbers, you've had several awards, a number of awards, I've lost count, over those years.
There's been a lot of awards, which is really, really nice to get. And generally those awards are because we deliver results without, with less than average volatility.
They're a nice reminder, aren't they?
Yeah, they're nice to get, yeah.
Gary, let me ask you about this calculation and whether it's indeed accurate. Value plus diversification equals shock absorption.
Where'd you get that from, dear?
Just looking at it and trying to make sense of everything that you and the investment team do.
I think that's perfect. So I think that's exactly what you get, which is you can ride out the difficult times, which is what any portfolio that you want to have longevity has to be able to get through the difficult times. And when you get into those difficult times, people often say, what do you do in a crisis? And the answer is not much, because if you've gone into the crisis unprepared, there's very little you can do when you're in it.
So it's too late.
It's too late. So if the bottom falls out of the big US tech companies tomorrow, then you're not going to be able to get out, not at a reasonable price. The price will be marked down against you. Everybody's rushing for the door.
Absolutely.
So you can't get there. And that's the problem. It's like a fire in a theatre. You just can't get out. So unless you're the best way is not to be there. Don't be in the blimmin' theatre when the fire starts. So our best way of dealing with the Mag 7 bubble is to be massively underweight those companies, which is what we are.
I just want to close now on politics, but not too politically. There's pretty choppy seas everybody's aware of right now. What impact, if, say, Starmer goes tomorrow, would that have on markets? I've seen comments we might have another situation like the trust budget.
Well, I think you've already had a trust budget situation. It's just that because the Labour Party had learnt from the mistakes that Liz Truss had made in 2022, they had the common sense to have all their figures run through the Office for Budget Responsibility, so that it didn't come as a massive shock. But what did come as a shock in their budgets is they've been completely different to what they had promised. And the big issue with politics is that we are taxing employment, and the whole theory with economics is that incentives work. So when you disincentivize employers from hiring people by making it more expensive or more legally onerous, then surprise, surprise, employers hire less people. And that's exactly what's happened. So unemployment's now over 5%.
So if I can keep this thought train together, we've got taxing employers driving unemployment up.
Yeah.
We've got potential AI bubble burst, and we've got the potential for AI to ramp up productivity within businesses with a smaller workforce. How's all this going to look in a year's time?
Well, probably, I think as Emerson said, the years teach much, the days never know. You'll get much more of an idea of it in 20 years' time than you will next year, in the same way that when .com came along in the late 90s, where we are today, probably would have been very difficult for anybody to predict it would have gone down this route. But your point is a good one. The difference with this technological revolution is that it's going to affect professional people. So whereas through history, the administrators have not really had a rough time of it with newly designed technologies, although word processors and typewriters made the job easier, as did the telephone. But we've now got AI which can actually do a lot of the fundamental administrative work.
Agents.
Yeah, the agents.
But we're not in the Matrix yet.
It looks like it sometimes, Leo, doesn't it? It looks like it. Which pill do you want to take? I think that AI is going to have a big impact. I think it's going to have, it doesn't have to be producing productivity improvements of 2, 3, 4% per annum. If it can just produce a productivity improvement of 0.4, 0.5% per annum consistently, then that is going to make a big difference. And at Courtiers, we're already beginning to see the benefits of the AI agents that we're
Deploying several of which I've deployed myself.
and they're good, aren't they? And they make,
Really good.
And they make your job more interesting.
And they make you think.
They do.
They expand possibilities.
Yeah, they do.
It's really good. Is it symbiotic? Where you can drive the technology, and the technology then can drive your innovation.
Yeah, and it's still human beings using technology.
Yeah.
The technology's not taking over.
They're just waiting for us to plug ourselves into it so that they can do something.
I mean, what they're doing, they're taking the some knowledge of mankind and delivering it a lot quicker than you can.
Yeah.
So it's still mankind's knowledge and expertise that the bot is giving back to you, but it's sifting faster than you possibly could.
Yeah, it's great collaboration in that respect. Gary, thank you. We'll leave it there. Fascinating insights. Thank you very much for your time. And to you and the team for everything that you do. Thank you to our clients for any questions that you send to us. We'll always listen to them and see how we can get the answers back to you. If you do have any, please speak to your advisor or contact us through the website. Thanks.